What's up, everybody? Good morning. It's 27th of April. Very little pre-market action here. Stocks kind of drifting back up after yesterday's middle of the day selling. Good earnings. Very good earnings from Meta, surprisingly. Beats all across the board. Still got earnings season going on. We'll see how today pans out. We'll see you in just a second.
Talk to me honestly.
Alrighty, y'all. Still battling a little bit of a cold. I was out of breath just walking up downstairs. Woo! What's up? What's up, team? Colds are no good. I'll tell you, I know it happens. Like I said on Sunday, we were at this club, like a swimming pool / DJ. There were like 50 people there. Picked up a drink, took a sip of it. Like, oh, that's not my drink. Some melted other drink, and here I am. We got picked up some kind of cold from some stranger at a club. All right, let's get ready to get going. Turn on that music. Wait. All right, let's take a look. What's going on down here in pre-market? DD bands really close. Oh, look at Meta's move after the. There's no DD band on Meta. Meta's move after earnings was pretty sick. I like it. Take a look. So we do this pre-market check every day. If you guys are new here, especially, just kind of hang tight, get used to the flow here. Rational. Nasdaq's stronger. The two clearly got that pre-move off of Meta's pre-market movement. VIX still trading lower. We want to see VIX kind of push its way down towards that triple B to give us that kind of, post contango effect as we trade out some of that. So we need to get below 1826. So rational. No catalyst. Things look pretty good. Get back to the main window here. Make sure you have your liquidity maps open. Get this from our Discord or from your dashboard. Let's take a look at the news in the morning. GDP, obviously, big data. Coming through at a 1.1%. That's expected as well. Obviously, production's down, new orders are down, the PMIs are down. Everything was projecting that we would be down a little bit. Now, again, this is the quarter-over-quarter. Quarter-over-quarter, obviously, it's compared to, it's going to be low because clearly we had last quarter. Oh, let me turn the music on. So just keep in mind, it's going to be low because of the change from quarter to quarter. That's kind of what you're looking at, right? In general, you see the raw GDP right here. Yeah, wait, hold on. Sales up, jobless claims. These are important numbers as well. So we need to take a look at the initial and the continuing jobless claims as well. Our PCE coming in right almost at par, a little bit over, but we still have this sink of jobs. There are more and more and more people who are getting unemployed or becoming unemployed and unable to get their jobs back as of late last year. Clearly, the people that are getting fired in the first 3 cycles are easily able to get their jobs back. And you can see right here, companies are closing the doors, the jolts are coming down, so there's no job openings. So people are being laid off and staying laid off. So 1, 2 waves of layoffs, we were able to get their jobs back. Wave 3, not so much. Wave 4, not so much. These are new unemployment filings. People just got laid off. So this group of people, these are your basically, during the post-COVID frenzy of market highs, people getting crazy salaries. They would get laid off, trim the fat, they move to another company. Now they're not able to move to another company, so people are stuck without jobs, need high salaries, and companies aren't paying because they're closing jobs down, production's down, GDP's down, everything's down. So interesting to see that. The trend continues. This is an issue, especially with market liquidity. People aren't putting money in 401ks without working. You're going to see there's going to be fewer people buying stuff, so productivity. Production is going to meet demand clearly, and people are going to overproduce, and production is going to slow down. New orders clearly are down. We saw that in the PMIs, which means people, the companies aren't buying products in bulk or any kind of orders being bought. Nobody's buying stuff because commerce is down. People are unemployed, they're not spending money. So that's what you're seeing. Consumer discretionary is getting hit pretty hard for that. And this is just general slowdown in a recession. It's nothing to be super alarmed about. The companies aren't filing bankruptcy yet, so we're still trading okay. We're still mechanically in a short squeeze. Good trader still shows that. We open up in 2 minutes. Let's analyze that. We do that all the time. You still have liquidity on the asset manager side going more net long, and the leverage funds going more net short. So that divergence there shows growing liquidity. Shorts entering the market, longs entering the market, growing liquidity. The dealers are positive. In the history of the TFF report, never in the history of this report since the mid-2000s has this red line been above 0. The markets collapse on itself. This is a recipe for a short squeeze. As long as there's buyers, the price typically raises. When dealers are long and people are buying, dealers are long and people are buying, you have waves up. This is going to squeeze up. We're going to 4,600 before the summer. This is for no reason can I see us not doing it. Red line above 0, green line's going up. When you find buyers in the stock market, the dealers will raise the price as long as they're holding the bag. This is a tried and true relationship. You heard it here first. We love this. Good morning. And people are still buying houses. Isn't that weird, right? Well, that's, there's obviously, it's a weird environment that we're in, right? It's not like everyone's getting hit the same way. It's really hard to figure out because there's a lot of metrics that disagree with the recession, a lot of metrics that kind of point at it being twice as bad as it is. And then, of course, the stock market's not going anywhere because of that. Gabe says could have been worse. Could have picked up the herps. Ugh. Yeah. Was it VIX or R2YD band that needs to be calculated differently? It's VIX. VIX is just a little more conservative. So with VIX, we actually we use a mobile risk interval for VIX. Actually, let me get the I need to get the bands on here. Well, let's estimate it. So we did find yesterday there was an error in resilience. The zeroing on the chart. Resilience was correct. The chart was at 0. The suspicions were there. I went and checked the test server and made an announcement about it. Resilience 0 line was in the wrong place. It is fixed now. So what happened was the resilience 0 line was off-centered, and it actually had to do with we had some kind of outage, if you guys remember a couple weeks ago, where half gap disappeared. All the halfway points had disappeared. It's related to that. And again, the resilience wasn't that noticeable until yesterday. Georgia homes affordability issue. Oh, really? Backlog of homes under construction, hence permits are down. There's a shortage. Homes affordability is an issue. Oh yeah. Okay, we got the hedge pressure coming in 407 on the S&P. We are opening inside of a large redistribution zone. The corrected resilience. Let me again double check the test server here, making sure the numbers are the same. Looking pretty solid here. I'm gonna get that load out right here. Come on, baby. Let's go. Let's get a pro. Double checking that the numbers just are the same. 35.9. Okay, so we'll take this really quick. Alrighty, let's get a readout. All right. so we are holding, okay, positive res means we're supporting half gap, bull zone. DD comes in, we're going to hold, so hold that bull zone there. Looking at the SPY at the open, looks like futures looking pretty solid there. Double check. I'm just waiting for all the data to come in. Let's look at this. Earnings today. This is Thursday, right? Amazon today. After market, that's T-Mobile. Okay, that's pretty much it. So QQQ, BSU, everybody get out. What you do is the first thing we're going to look at is we're going to pull out our liquidity map. BSU is resistance from hedge pressure, support at lowest call wall, which is right up in here. So this is a nice little dip to buy. Breaking through hedge pressures is, you know, historically percentage-wise, when all markets are rational, about 11% back test. So I'm going to have to be very cautious just scalping inside that range there. So news coming at 1700 today. What do we got at 1700? Fill me in. Anything else today? Pending home sales in about 30 minutes. Okay. QQQ, BSU, same thing. So BSU has a really interesting setup where you're going to have resistance, hedge pressure resistance, and then bull zone support. So in an ideal world, this falls and moves to the middle. There's a big range that can happen. What I went short against here, it's hard to say. With resilience being positive, any short supports at half gap. So let's piece it all together. Okay, ready? DD 68. Well, this is on QQQ, but it means bull zone is supporting, resilience is positive, means half gap is supporting, BSU means we're resisting. So there's scalp potential in there. All right, that's the read. Market's flat to high. Nothing really too bad. Let's go IWM. All right, let's go. If you guys are new here, just stick with it. Trust us. It takes a little bit to get used to the read and the style here. IWM, BRSU, different setup. Go pretty quick, but once you get good at this, you get good at this. Again, hedge pressure resistance support at half monthly hedge down here to there. So we'll see how that works out. Again, resistances looking good. So long at half gap might be all right. Do I bet on hedge pressure break today? I don't know. We have big earnings coming up. Probably not. You don't really see the market pick directional moves when you have big earnings. So potential hedge breaks to the upside. Just keep that in mind. There is a bull zone support, DD 68. So upper band before lower, check, right? As long as we are on the upside of hedge pressure, it's going to take again. Oh, they're open exactly the same spot, huh? Okay. So there's support here. There's support there from res, and like easily seeing that. Okay. So this is a pretty good setup. If I were to long, I'd probably long again and scalp to there. But any break to here could move there by the end of the day. Any loss of bull zone would be not easily achieved. These two numbers being so positive, right? So market's looking pretty stable from here. I don't see any signs of caution here. I'm doing a 10K to 100K challenge, so you guys know that account is up to almost the 60K mark because of the faulty resilience scaling. I took that trade in the middle of the day, kind of like while I was at the end of yesterday's podcast with Anthony Crudelli. I was in the podcast, and at the end, I was like, oh, cool, we're hitting half gap, let me long. The scaling resilience was off, so that was what happened was it was actually breaking through zero, and it didn't show it on here because the zero line was off. Tiny little graphical bug. So I made 7K earlier, and then I gave back like a little bit over 4 of it. So I only walked away with about 2,500 yesterday. This, we're doing 2 challenges at once. This is an elite trader funding thing. I did 3 funded account programs in a row. I knocked all 3 of them out. I earned $550,000 funded accounts live on stream. So I'm just knocked 1, 2, 3 out. And what I'm doing is I'm doing a challenge to show how a trader can go from $300 for a monthly fee to get a funded account to make 10K, then take that 10K to go to 100. And I'm just filming all different pieces of that. So right now, this is that account. This is that funded account on my other screen. I have my 10K challenge account, doing both of them at the same time. My DD bands are off. I haven't moved them yet. Okay, we got resilience positive, spraying that open. I'm just kind of guessing right now where I think they will be. Do I like what I see? I don't have any fear of this market right here. Looking pretty good. I was just guessing. If you guys can hang tight, I'll go grab this from the bot. I'm just guessing about maybe like right there. Normally what I do is, these are converted from ES to SPY, so I do move them around whenever, the conversion does change. So I'm basically just watching the actual band on the futures chart. So the actual band is static. Anytime you convert a static futures number to a number, an ETF, there always going to be a little bit of a deviation there. All right, let's see what we got here. Anything good? Nasdaq is really close to that upper DD band as well. So, SPY holding. Yep, it's a long up for 407 to up. Let's see if we get that. Take a little small macros trade here. I do like it. Supporting to the open. Interestingly enough, hedge pressure break to the upside. Could be a quick squeeze to upper DD band. Watch this. Watch Nasdaq all at the same time. See which one touches first. Small position. Look, 5 micros. Nothing big. Any stop loss I have will be down inside of here, so I can calculate if I'm going to lose. This is $250 on 5 micros as a loss if I go 10 points down. So that's not really too bad of a deal. All right, I like what I see. Got any questions? Anything going on today? Let's look at Amazon today. So it opened breaking HP, so trade with super caution or rational. Oh, right. Any hedge pressure break to the upside is gamma squeeze potential, right? Moving higher. So any hedge pressure break, I always trade small, just because the volatility picks up and have the ability to cost average in. So I'm not really going to be too aggressive on this, but I always like to take bull longs. So let me break up. All right, I'm gonna give me some breakfast. I'll be right back. Don't go anywhere. And having a cold sucks. I hate it. All right, I'm back. Oh my god. All right. Open break hedge for sure. Super. Yeah. Super caution. So I just put like something small on the table again. Okay. Amazon pulling back. Resilience still good. Double check the test server really quick. Okay, good. So resilience is good. Double check this. All right, we're good. So kind of keep an eyeball on this one, making sure this guy stays right at 0. Let's keep a look at QQQ really quick. Not too worried about it. The only problem is hedge pressure is always resistance. It's really hard to break through. There is an illiquidity pocket, so even a quick break. The upside today is very limited, and you have DD bands up here as well, so there's not really a lot to break to the upside, and plus you have Amazon earnings. So let me double check. Yeah, earnings today. So we have a gap fill obviously clear here. I think that'd be good to have the market continue to squeeze higher. I'm in the boat that we're going to continue to squeeze higher. There's no way to not think that that's possible. Commitment traders and all things point up. You guys smash that like button while you're chilling here. We love y'all to death. Give us some algo love. Throw out some tickers. You guys want to do some little trade plans. Ended up taking your first trade using RX2 yesterday. Still having all that info gave you a lot of confidence. Oh, very cool. Extra confluence that you get on top of everything that you probably already do. Hopefully has a good additional layer to your style. I'm glad you like it. You get more nervous playing Fortnite now than staying in your trades. Barb, I can imagine you screaming at your computer, being like ragey in a game. I used to be like well, I still am. I still play Halo all the time. When I was younger, I used to be like so anxious when I would play because I was so hyper competitive. I was one of those, you know, intense teens that would just be like yelling at everybody on Xbox Live. Fortnite's a lot of fun though. We still play Halo Infinite. It's Rocket Shooter folks. We have game day on Fridays, so we all get together and typically squad up and play something. You guys play any games or do anything? We have a social group inside of Rocket Scooter's Discord, so everybody gets together and does different things. Online poker is a group that does that. There's a group that does all kind of gaming, Warzone, Fortnite, you name it. When there are 2 players left, you get crazed. It becomes like a tornado in your room. You're like throwing stuff around. You had a cold and it was the worst. Oh, you did too? Man, I'm gonna tell you, Barb, it's like this was like a crazy, like it just hit me that night. I thought I smoked too much at the pool hookah. So I don't normally smoke. I don't smoke anything normally. So my lungs got a little, you know, they get a little etchy. I always like describe the feeling. It's like a little raw when you smoke a little bit of hookah. You don't smoke, or you smoke anything, and I was like, oh man, my throat's just a little But I do remember distinctively accidentally picking up a cup that wasn't mine and drinking out of it, and I was like, ugh, melted Coke and something. Ugh, I wasn't drinking Coke. I was like, the worst feeling in the world. I told you all that story yesterday, and I think it was like Slacks was like, something still haunts him about the time you picked up a can of Squirt and there was cigarette butts in it. It's like, I was like, oh, I hate that. And you pick up the wrong can and drink out of it. VIX is in decay right now, which is really good to see. We're dropping right about 19.5 in VIX futures. That front month May contract looking pretty okay. Yeah, so I was like, man, I probably caught somebody's summer cold. Got banned from Warzone. Anti-cheat for having hedge pressure enabled. That's right. Well, you know, hedge pressure is the wall hacks of the financial world. Your sister-in-law drank your brother's chew bottle thinking it was Coke. My brother did that when we were kids. I remember that. And he got sick. Well, he's a kid. It's like a baby, like little kid. All right. So anybody have any tickers you want to look at? Just check this out. I'm going to run the scanner for making sure. Get some bull setups here. Get them all running. All right. My car got towed yesterday, so we got to hunt it down today. Went to the gym, Parked on a street where there was a no parking sign in it. See it because there's a tree covering it up. Go out there after the gym. All sweaty, ready to go home. Car is gone. They got to go dig it out of the impound today. Gotta love it. And I bet you they took zero care of it. Mofo's going to come back with scratches all over it. Tesla, let's go. Well, SPY bounce off of upper DD today. So the action at DD is indeterminable. DD is a target that I look to achieve whenever it is moving. So Tesla is looking to break through hedge pressure. That's good to see. Let's take a look at, let's see where just monthly resistances are on Tesla. What car is it? Oh, it's the Maserati. Yeah, so there's no up here. Let me show you which one it is. That's a picture here. It is this one. That car right there. Those black rims only stay shiny for a day. I do live in Houston. So oh, it's a Ghibli. GTs are nice, but I like 4-doors because I mean, I do like 2-doors, but I like having that back seat just to, we have a big family and like always having to lug people around. And Ghibli, thanks. Yeah. You work at Galveston, Brady? You know how it is, right? Dude, in Houston, it's like you watch your car, it's like shiny. You just take a picture of it, and then like by the time you get home, it's like covered in dust again. That Houston road dust. SPY balance. So the way I look at DD, let me show you something really quick. So there's two different modes of trading, right, inside of these DD bands or outside of DD bands. So typically these bands are calculated one risk interval up or down in the futures market from the close of the day. So we add these numbers. These numbers come from the Discord. We also hand out, they're not automated in Rocket Scooter yet, this futures data. When I trade futures, I'm looking at SPY liquidity map. That's one thing I want everybody to know, especially if you are a futures trader, especially if you came in here from yesterday's podcast and checking it out. So I look at SPY and I push the button on ES. That's how liquidity map works, because it's the magic is looking at SPY. We don't do liquidity maps on futures. So we're about to get futures data and futures trading in the platform. And when we do that, I'm still going to look at SPY while I trade futures. And the idea is that I'm monitoring the S&P relative to other instruments in the S&P, SPY and ES together. So the idea is when you're looking at the entire stock market, the SPX tracks it. You have SPY has its own supply and demand, S&P futures has its own supply and demand, and they're all trading independently, but they're all trying to track each other as well, right? So I'm up about $1,000 on my 10K account. I just got some micros here. Again, when it comes down to these elite trader funding accounts, I can't take anything big. I want my first trade to be a home run with a lot of potential because it's a static draw and I have to build some fat off of this account. Your first trade on the funded side needs to be really big so that you can have a buffer to trade normally. You know, being so close to the cutoff right when you get started, you have to be very cautious. So the trick is with these funded accounts, as I'm discovering with the strategy I'm using, is that you want to really just wait and strike hard on that first trade and get a really good buffer on that. And then slowly trade it from there. Barb says traumatic. You snot cup in your car holder for your snotty clicks. These stories are getting worse as y'all are telling them. I don't want to hear any more gross drink stories because I'm gonna start gagging a little bit. Snotty Kleenex when I was sick in college. Take a swig of snotty tissues mixed with melted ice. Barb, I think you win the contest. That's grosser than Slacks' story. Blah. Blah. Will you exit the micro at the DD band? Yeah, I will. So the smaller account, yes, I don't actually trade and bet the DD band breaks, but let's take a look at the different modes. One of the modes is inside the bands. The bands are on the edge right here, and inside the bands are here. So anytime you're trading inside the band is considered a resistance. The DD rule states that when markets are rational, we look to touch the upper band for the lower band if possible, and there's nothing else in the way. Check. That's why I logged. Number two is DD ratio converting back to the equities analysis is that the bull zone is support. Okay, check. So I just bet that that's a resistance. I don't bet that it breaks. The hardest thing for you to bet is that a rational, stable market destabilizes for any reason. Now, with earnings today, I will tell you what I've learned as a trader. Leading up into a major earnings, like a major big mega cap earnings like today, it is the rarest thing for markets to destabilize and just run amok and run a rally leading up into a big mega cap earnings, unless that earnings is going to be bad, to snap it back down so it can mean revert. The market doesn't like to create turbulence. So again, if say you had inside information and that earnings report is going to be good, you as a market maker wouldn't raise the price to squeeze people, then they have the market go crazy on the report. You would typically want to price it in ahead of time. So if the report was good, you would be lowering the price so that it snaps back into place. If the report was bad, you'd be raising the price so it snaps back into place. With the trend being that almost all earnings, especially major tech, surprisingly are coming in as a beat. They're also the ones that trim the most fat. We're realizing that the tech industry is a bloated machine. We learned when Elon took over Twitter, Elon fired 80% of Twitter. Why? Because he said you don't really need that many people to run Twitter. And they were saying, well, why do they have so many people? And Elon was saying, well, if you're not trying to be an anti-free speech censorship political vehicle, you really don't need a lot of staff. That's something like that, and chuckled. So it's kind of like, yeah, to run a tech company, you don't need a lot of that overhead. So a lot of people are just trimming the fat, and now they're all shining on these earnings reports, right? So you can imagine that Amazon's probably going to follow suit. Let me tell you, Meta to me was the complete garbage darling. Like Meta was going to shit the bed, in my opinion, and Meta came through beating every single category. I think it's Brad Freeman or somebody, I retweeted him. He had some good data that came out, and I think it was Brad. Let me check. Yeah, it was Brad. Brad threw in a just shows like Meta's earnings. I mean, look how great that is. They beat it by 4.8% just on revenue alone. Let's see, estimate 11 beats 120. Beat estimate 77% on earnings per share. I mean, it's just across the board looking hella good. So the idea is that, well, like, okay, why is everybody looking great? Why is earnings looking great? And it's just because this is the quarter that's reflecting last quarter's effort of people getting laid off. You can tie this directly into the jobs reports. I love to do these relationships. If you guys want to learn how to do fundamentals, we teach some really good fundamentals courses. We don't analyze the fundamentals on the surface. We predict what's going to come from data that ties into other data. We've been saying for the longest time that this was going to be a bullish quarter and earnings are going to be amazing across the board. Why? Because companies are trimming their fat. They're trimming their unproductive workforce. They're trimming the people that worked from home and didn't do anything for really good salary and getting raises during COVID to stay at work. Companies had the desire to dig themselves out of the hole. They would do anything to get people back. Their share prices were at all-time highs, which made no sense in the world. They had money to spend, and they had to beat inflation during the recession. So there were people that were getting ridiculous salaries at the same time. And now the companies are paying all this money to get their production off the ground. You pay a little bit, obviously, when the market collapses, you need to get people back to work. You need to incentivize them to come out. And there's a bunch of hurdles there. Either people are getting offers from other companies because everyone else is trying to start up, so they're being competitive. They say, oh, you want to hire me back? Well, Joe down the road offer me 10% more. You need to give me 20 or I'm going to go over there. And company's like, all right, fine, I'll take you. Or it was, oh, you need me back. I'm the only person that can do my job. Yeah, but there's a pandemic. I don't know. You got to pay me a little bit more to come out of my home. I'm safe here. People were like, all right, we'll give you 20%. He's like, okay, cool. The other people like, man, I can't come back to work. I just bought a house during COVID and I paid 50% over market for it. Oh, well, all right. Well, we do need people, so we'll give you the salary you want. And boom, wages went up, right? And it created cost push type inflation from the shortages, plus that created the inflationary environment we're in. Now, companies had to raise their prices and margins were pretty bad last quarter, and that's what we saw. But the forward guidance was really bad because people didn't expect the layoffs to come. And then towards the end of the year, we started getting waves of layoffs, which is great because companies started trimming their fat. So with bad forward guidance, markets built into the heavy short on that, and the companies started trimming their fat. Those shorts are now getting squeezed into this quarterly earnings as all the earnings are on paper looking amazing. This is not bullish for the economy. This is a trick on paper that's due to the fact that companies are now realizing they don't need that third accountant. They don't need that you know, that fourth procurement manager, they're really starting to just lay people off that are unessential, non-essential to the business, and trimming their fat, and therefore their bottom lines are looking great now. They're saving all this money and having all this cash flow, which looks good. But we're robbing Peter to pay Paul, because next earnings reports next quarter are going to reflect the lack of productivity from them over firing into the productive part of the workforce. You laid off your non-essentials, and now you're laying off some of your essentials because new orders are down. People aren't buying your products. You don't need as many people working in the factory. You wish you could have them all there, but you're not making the sales you're going to produce to meet demand. So supply is going to start coming down, which means that inflation, remember, if supply starts coming down from lack of productivity with a constant demand, inflation starts to come up, or prices come up a little bit. So it can create a secondary wave of inflation. To be careful there, especially with the Fed tapering off their rate hikes, which quote unquote de-incentivizes lending. Now, again, that's not going to control inflation as much as people getting laid off, people that don't have jobs or high risk with a low income to debt ratio are not going to be easily able to get loans or credit. So the idea is that with the Fed-induced layoffs, that's going to destimulate the credit environment, which will bring inflation down if there is that kind of control effect, rather than the direct effect of raising rates normally. So this is like an indirect control point the Fed has on inflation, is laying people off. That will prevent banks from over-lending and creating a bigger bubble. So in essence, unemployment is doing the Fed's job right now, which is good for that effect. And the Fed no longer raising rates is not going to put that bearish pressure on the market, but still, the market's still going to come down. I think we're going to rally through this summer, and then again, we're going to hit that 4,600 turnaround sell off. Those are my thoughts for the year. And again, right now, companies are their forward guidance is looking okay, right? Depends on who you're looking at. But we're going to come around next quarter, and you're going to really see the hit in sales. All those people that are laid off and the growing unemployment, these are people that aren't going to go out these are people that aren't going to go out to Costco and buy a new TV, right? These are people that are not going to go to Walmart and buy a furniture set for the balcony, right? These are people that are going to basically be buying food, gas, electricity, paying their phone bills, and staying, trying to stay afloat. Likely a huge bulk of these people that are unable to get their jobs back are probably sitting there on car loans. They probably got a high interest rate loan on a car. They probably have a high interest rate loan on a house. They probably paid well over market value for their house during that COVID hype, and now they're really stretched. So because of that effect, I'm predicting the next quarter is going to be a very, just right on the surface, a really bad hit on sales. And the PMI numbers showing new orders were down is showing that lack of demand as well from the unemployment. So let's predict, right? Inflation is going to start ticking up a little bit, not a bigger wave, but a secondary wave. The Fed's lax on the rate hikes. People are unemployed, and demand is still okay for goods, but supply is going to come down again because companies overfired. How do you know they overfired? Well, they're closing their jobs down, right? They overfired means they fired people, and jolts are coming down, which means available jobs are being trimmed. Most of it's non-essential, but a lot of it's essential now. The people are starting to get laid off because you're meeting productivity. So the used car market's going to be terrible in the next year. I agree. Google's better cash flow, make more money. Microsoft is less, and Microsoft is over 2 trillion market cap. Google is right over 1 trillion. The startups are laying off essentials. Yeah. Well, I'm hiring people. That's one plus side in this recession. Rocket Scooter's hiring. Speaking of, if you ever wanted a career, it's gonna start off as part-time, moving to full-time. Now let's make an announcement here. We're hiring an essential employee right now. It's a permanent job. It'll probably be part-time, so you can work this with your regular job. We need an affiliate program manager and platform expert. So essentially, you're an in-house trainer. You customer service. You train our affiliates. They come out with a new thing called monthly maps. You'd go host webinars, seminars, teach them how it works. You can teach people how the platform works. You essentially train people on the platform. You part-time work. We are hiring. If you think you are good at, you don't have to be amazing at trading. You just have to know Rocket Scooter. You have to love the product, of course. Send me a resume. We are looking to hire you, our successful candidate, by the end of next week. So if you are wanting a career in the financial world, you're gonna work for yours truly. I'm not that terrible of a boss. Affiliate program, well, director, I guess, not manager, but program director / trainer. As we grow, that can be split into 2 jobs. Well, you're the director. You can decide that if you want. Just let me know. Part-time, evenings, weekends, you know, make a little extra cash. Banks could target corporations via decreased lending, rather raising rates. Target those with floating debt, retail and small businesses. Adjusting money supply is a better mechanism. I 100% agree. Green buys up. The interest rates, I've been saying since the start of the rate hikes that cost push inflation cannot be directly controlled by Federal Reserve rate hikes. It's not as strong of the incentivizing mechanism because the components that led to inflation have nothing to do with the borrowing frenzy of people. The borrowing frenzy of people is a result of the lax credit market or lending standards of banks that is a result of their stock prices being high and there being a bubble. Fed can't control inflation that way if the reason for inflation has to do with the front end of production. Lack of supply causes prices to go up. And the Fed changing interest rates not going to change the amount of materials people are digging out of the ground, the amount of oil people are pumping out of the ground. It's not going to change the labor market. You raise interest rates, doesn't matter during a recession. If the reason why your price of your goods went up 20% is because there's not enough truck drivers to get your product to market, and the one person that wants the job, you and 5 other people are competing for his or her job, and they want a huge salary for it, and you have to pay it, and therefore you have to build that into your price. Fed has zero control over that. What they did do was the smart thing is indirectly control it by forcing layoffs. Exactly what they should have done. You scare Wall Street when stock markets are all-time highs, when data looks bad and you're initiating QT. You know there's a recession coming. You're going to induce a tiny recession, a mild one. You're going to force companies, you're going to wake up all these companies and slap them in the face and undo the effects of post-COVID hiring frenzy and inflation by inducing layoffs. Literally behind the door of the Fed, when they're having the meetings, Jay Powell is basically like, look, trust me, guys, we're going to raise rates. And they would be like, but Jay Powell, that doesn't control this type of inflation. Yeah, but we'll tell everyone it does because that's all people care about. They're like, well, what is you're trying to accomplish? Well, if I start raising rates and announce QT, it will scare Wall Street out of this short squeezing frenzy and start bringing the stock market down, which means companies are going to have less cash flow and they're going to be a little bit more tighter in their hiring standards. It'll force them to lay these people off who literally, we just learned that companies have 10 or 20% of their workforce sitting at home and watching Netflix for a living for an inflated salary. So they're going to, let's raise rates until we scare the stock market enough. They lay those people off. Therefore, you saturate the job market. The demand for workers is the same with the higher supply. Wages come down, therefore inflation's controlled. And they're like, Jay Powell, you're brilliant. He's like, that's right, but we can't tell them we're inducing layoffs because that sounds a little morbid. It sounds anti-American. But I want to get some people fired. Okay, all right. Seriously, that was a very smart mathematical financial decision. I mean, it's the best decision in the world. We need to slap these companies around and tell them to stop paying these work from home employees. No offense if that was you guys that got laid off, it sucks. But we're all part of the system here, and that's exactly what they did. Raise rates until companies start laying people off. You know, they did. They'd raise rates, watch some layoffs, and he told you every single step of the way. He didn't tell you that was his goal, but that was his goal. We're watching the labor market, Okay, we're going to raise rates. Here's a cycle of layoffs. Raise rates. Here's a cycle of layoffs. Raise rates less and less and less. Okay. Shit. Now we have people getting laid off. These are first-time jobless claims. You get fired, you're going to literally go home, get out your laptop, and file for unemployment. This is like that first week you got fired. Wave of firings, second wave, third wave, fourth wave. Problem is, waves 1 and 2, these people, this is continuing jobless claims. People week after week continuing to file, or people still qualified beyond the second week, right? So again, unemployed and not getting your jobs back. If you're getting your jobs back, people that are getting unemployed are getting their jobs back. So here's wave 1, they got their jobs back. Wave 2 got their jobs back. Wave 3, ooh, didn't get their jobs back. Wave 4, ooh, didn't get their jobs back. And guess what? Fed's going to 0 rate hikes probably this meeting, right? Didn't you know that they're raising rates until people couldn't get their jobs back, and now they stopped? We predicted this last year, that the minute we saw the continuing, didn't you guys remember? It's a big old fat yes in chat. If you remember, a year ago I said this. I've been saying this all year. We give lessons on this. As soon as we see those unemployment claims no longer coming back, where people can't get their jobs back because companies are laying off essential employees, the Fed will go straight to zero on rate hikes. And I even predicted last October, I said, by February, March, we will see zero rate hikes because of this effect. The minute we get over that seasonal unemployment in January and we see that people aren't getting their jobs back for realsies, the Fed's going to go to zero, because all they wanted to do was induce layoffs. That's exactly proving my thesis. And now, and then every single time Powell spoke, he was like, job market, job market, job market, right? They're wanting to get people out of the labor market to bring wages down, because that is the biggest mechanism for the inflation that we're experiencing. So if you think about it, when we teach fundamentals, we teach you to see it ahead of time. And I made a tweet and I said by the March meeting, we would go to either 25 or zero, if not by March, by April. I predicted that this meeting coming up in May, or that we'd be at zero by now. So we had 25. In the last, remember the last announcement, they put out some numbers. They were saying that basically they're expecting to be no more rate hikes for the year. If possible, maybe 125 basis point rate hike, and that's it. Exactly right. All you need to do is lay off enough people to bring wages down and just trigger a small recession. How do I know that the recession is going to be small? Well, Wall Street's telling you. They don't believe it's a big deal. Welcome asset managers. Net longing since October of last year, since the bottom. Welcome 3,500 being an appetizing low for the stock market, especially if you look at the futures market. They go from 200,000 net long contracts to 600,000. They have literally tripled their position on net longs in the futures market. Doesn't mean that we're rallying, going to all-time highs, but it does mean we're more prone to double top and sell than we are to sell from here. There is no mechanism for this market to fall under its own weight. If you're trying to short this here, good luck to you, friends, because Wall Street is 100% against you. What's up? In every single short, the market has never been, well, actually, let's take a look. In the futures market, hasn't been this short in a very long time. Minimum Traders is one of the best reports you can use. I like to look straight at the S&P futures and pretty much ignore most everything else that's kind of noisy. You will see the following effect. Okay. Right now, this blue line is the leveraged funds, the net contrarian position in the market, typically always short. You see this blue line where my mouse is, has only been this low one time in the history of the TFF report. Oops, let me get up here. So what's neat to see is that the net short built on the recession is so massive, right? This minus 600,000 contracts almost. It's only been this low right about October 2015, and that was during the I guess that was right before Trump was elected. So this is like the tail end of that year. Market was nice and flat, and then of course it's got a pretty nasty short on it, but you haven't seen the market this short ever. So the neat thing is that when you have people short the market and people are growing into longs and the dealers are positive, anytime you see that green go up, blue go down, and red positive, let's look at it. Ready? Positive, let's find examples of that. Green go up, blue go down, red positive, you double top before the sell-off. Here's an example of that. Green go up, blue go down, red positive, you consolidate and rally. Let's go ahead and make it a little easier to zoom in on this one. So essentially what happens is when these two numbers, when these two lines fan out from each other, this is longs becoming more long, so more bulls at the party. This is shorts becoming more short, more bears at the party. The room full of people just got double as crowded. So there are more traders, which means liquidity is coming up. Wall Street is longing the market since October. 2 days after the bottom, I actually tweeted, this is the bottom. And I'll never do that. And I Babe Ruth this thing, and I tweeted, I saved my bookmarks. This is the bottom. Literally the day after here, I finally said, this is the bottom. All those mechanics added up, I said, this is the bottom. And we'll have zero rate hikes by April. People thought I was silly. And dude, I've been long ever since. And I'm going to tell you something. Check my trade. Oh, shit. Hello. Oh, DD Band. Thank you, buddy. All right, let's close that. And let's close this. Perfect. That's all right, done. Thank you. That's the DD Band. I love you guys. All right, perfect. All right, perfect. Here's the 2,800 in my 10K account and 243 in my Elite Trader Fund account. Thank you, Joel. I owe you a beer, bro. Here I am covering up my shit. All right, thanks. I'll send you a 10% finder's fee for telling me to close my trade. All right, I'm done. my man. All right, upper DD band. This is textbook. BLU to D band. Close out. Done. That was textbook as shit. I'm out. Easy. Easy peasy. Lemon squeezy. That's good. That makes up for yesterday's loss from resilience zeroing issues. Rip. Rest in peace, resilience. This is my frowny face from yesterday. I get back over $4,000. Buying half gap with resilience 0 off. I've been double checking this all day. Resilience is correct. What happened was the scaling was off, and I kind of pinged some of the folks in chat to say they looked like it agreed. So essentially what happened was resilience, the half gap, the dash line was actually was pegged at -100. So the 0 line was magically up here when resilience was actually doing that. I thought it was positive all day. We lost the 0 line, which is weird, and so the scaling was off. RIP. You lost your house due to res. Well, come live with me. I have an extra room. But I warn you, you will have 2 cats that will always crawl in bed with you and nuzzle you and annoy the shit out of you while you try to sleep. It's adorable, as adorable as it is annoying, I promise. You can hang out. We can take a gummy every night and watch comedy and laugh and drink beer. I have a pretty simple life. Do you like crosswords? I like crosswords. I'm way too nerdy, but it's pretty chill over here. How do you add DD bands on the chart, Satish? I actually draw them manually. If you want to add them to your Thinkorswim or TradingView, in the interim, we have a stopgap for people to use the member-made tools. If you go into our Discord where the bots are, there's a little section that says member-made tools. Members have made a version of automated DD bands for Thinkorswim. They've made an automated version for TradingView. When we get futures data finally into our platform, which is our one of our next big projects, it'll just be automated for you. But so essentially, I use the Thinkorswim and I manually convert them. I cross multiply and convert them to S&P derivatives or Nasdaq derivatives. So I look at this. I'll convert this to QQQ by just cross multiplication, and then so we'll have the same thing automated for you. But yeah. Hashtag I love gummies. You guys, I'm gonna tell you something. I can't be on all the time. I'm such a high energy person. So I'm caffeinated in the daytime. I'm always working. I work 16-hour days. You guys know me. At the end of the day, I gotta load up on. Something to kind of mellow out. Nicole and I'll have a glass of wine. We'll chill, watch TV. We're really basic people. We'll go for a walk. I work out every day. That's one of the things I do as well. And we just got this. So we're part owners of a distribution company that makes and distributes edibles, basically. So we have really good stuff. It's family business. Pretty cool trade. Did a good job. So when she came back from her trip, she brought her brother-in-law. Had this really cool, it's kind of like if you ever go to a trade show. Everyone has different ways to create product. So there was this 100 milligram Reese's peanut butter cup. I've never had a Reese's peanut butter cup edible, but it was so good. This just tastes exactly like the real thing. It was pretty good. I like to take a nibble though. I don't like to get too. I like to just be a little mellow. So I know I'm a wuss. I'm like a 15 milligrams or less kind of guy. I don't like to get high or stoned. I like to just get mellow. So just enough to let me go to sleep, or else I'll be up all night, and that's typically how life goes. Yeah, and I only do Delta 8 because I like the mellowness from it better. To me, I like it a lot better. It's to me, the effect on me is in between indica and sativa for a. It's not so mellow like indica. It knocks me out, puts me to sleep, and not so up in my head. Paranoia high like sativa, and delta 8's like that right perfect little balance, so that's why I like it. Cross multiplication. Okay, so cross multiplication is where you take a value, you take 2 reference points. So an example is if I want to convert a static number to a dynamic number. Dynamic means it moves around, static means it's stable. So dynamic would be, example, S&P futures are where I anchor this calculation. So S&P futures create a green band that stays put. So we're going to do a reference point. So ES DD reference point. I'll put an R here, okay? Is some value. And you want to convert it to X, which is the SPY equivalent, right? You following me so far? Okay. And then what you want is you want a dynamic variable. So the dynamic variable is the current ratio of the two. As the S&P futures trade, SPY is going to trade, and they're never going to be exact, okay? They're going to be off a little bit. And so that ratio changes in real time. So you're going to take like a reference time. Let's call that reference time reference now. So you can take it equals. So the ratio should always be the same. So ES of now, or any reference time you want, divided by SPY. And that's the actual value now. So you're going to take the current value of SPY, whatever it is, current value of ES, whatever it is, and you're going to make a fraction. Let's call it like an F. F dynamically changes because each one of these has an independent supply and demand that trades different directions, right? You know, the ratio could be 10, 10.01, 9.999, whatever. And then you're going to cross multiply. So, you know, this is algebra. Now you follow so far. Random. ES over X equals F. And F you can calculate in real time. So people like here create an F in Thinkorswim. Like you can extract data from Thinkorswim using the RTD function and have it pull into an Excel sheet. And the Excel sheet just gives you the F. And you have your reference. This number is fixed, right? This is a static number. This doesn't change. Fixed. So you just have this constantly dividing by a ratio this is all automated. You can do a spreadsheet that automates this whole thing. It just tells you where the DD bands are and where they tick in real time. I have one. I'll show you how I do it. But it's I just sit here and it ticks in real time. So I go here, dynamics. This is my spreadsheet that runs the bots. So my DD bands, this is it. This is the fraction that changes in real time. Conversions. So these are the DD conversions. This is what runs the bot every day. So these data points are created from any. So essentially right now, SPY is going to be 408.64. But you see how it changes? 67, whatever. It dances around because the fraction doesn't change. Does everybody see how I did this? So you can actually make a spreadsheet. I have a video on YouTube that says how to make a Discord bot. And essentially what it does is how to use the RTD function. If you didn't know, you can take your trading platform in Thinkorswim and have it connect through an add-in with Microsoft services. There's one called RTD. And what it does is it allows you to connect and pull data. Use a little syntax like this. This is telling me the last price of S&P futures, and I just pull it right into Excel as long as Thinkorswim is open. So essentially, I pull in the last price. I have a DD low and DD high. This is calculated by the close price of the day plus or minus a risk interval, and the input's in here somewhere. So this is one of my cloud documents that controls the bot. So in here, this is the ETF. So this is the mark price of SPY. It's current mark price, and I take the current value of the S&P. I guess they're both here. Take that fraction, divide the two, real-time fraction, then I cross-multiply for the conversion. These two numbers, as you see, are fixed. So the fixed number divided by the fixed number divided by the fraction leaves you with the conversion. Or actually, if this is the case, yeah. So you move that X there, move that F there, and then boom, boom, boom gives you the answer. So you see DD numbers, when you convert, move in real time. So the neat thing about how we're going to solve that problem, you like how I can pivot from talking about delta 8 edibles straight into algebra. Now I'm going to talk about some coding, some sensitivity to data analysis. So let's go. Okay, ready? So DD moves around. Theoretically, DD will do this all day long, right? So that you're not staring at when you convert. Now, again, they're fixed in the S&P, as I showed you on the spreadsheet in futures. But when you convert to SPY, they're going to move around like this, right? So the idea is that, so you're not staring at a wiggly chart all day that does this. And that would be kind of hard on your eyes. We're going to we wrote a concept that we're going to code it in, saying that if you are a certain percent distance away from something, then its sensitivity to movement or its updating frequency is going to change. An example is, say that this is max distance from the bottom line. Okay, like we're way up here. This is 0. So distance away from bottom line. The farther away you are from this, the bottom line is going to update less frequent. So that way it doesn't dance around in real time. Like it doesn't dance around every tick. It's not doing this. Who wants to see that? You only care about what this value is when you're actually there. When you're far away, you don't really care. So the idea is that when you are max distance, which I'll set on a sensitivity, and you'll have a sensitivity control, what is max distance of 0? So essentially, this will update every minute. So every minute this will move. And every minute it'll just move. And every minute it'll just move. But when you get closer to it, it might update every 10 seconds. As you get really close to it, it'll update every tick so that you can hone in on where it's at. You guys like that idea? Let's all take a quick vote. That was my solution to the problem. Because anytime you convert one thing to the other, and imagine taking your hedge pressures and such and converting them to futures. Do you want your hedge pressure dancing around all the time, or you only want it dancing around when you're at it, right? You only want the sensitivity to be there when you're actually on the indicator. So when I take hedge pressure calculated from SPY and convert it to futures, hedge pressure in ES is going to be doing this all day long. Who wants to trade like that, right? Only when it's near it do you care about the exact value when you interact with it. Okay. So the idea is that, like right now, if you were to assume the DD, right now DD would kind of be moving around like every tick, okay, right here. And this one will be updating once every minute. Does that make sense? Is it better? You think that's a good idea? So anything that you convert, we're going to have a conversion algorithm with sensitivity. So you'll be able to go to the platform settings and then change that sensitivity. Like what percent away do you want this to update every minute? What percent away do you want it to update every 10 seconds? What percent away do you want it to update every tick or every 2 seconds? Our tick is 2 seconds in our platform. So the idea would be that you're not staring at a bunch of shit that dance around. It's going to be terrible in the eyes, right? So that was my idea. I don't know if it's the best idea, but we chatted around some of the folks in Rocket Scooter about this, about their, and everybody kind of was like, that's a pretty good idea. We'll see how it works. Somebody said one thing, we've been irrational, hedge pressure breaks to the upside. Irrational is something you're going to see a lot in a bear market. Bear markets are just irrational. That's the best part. Our platform identifies this. Somebody said UVXY. Let's double check this. UVXY bulls on bottom is an interesting thing. Now, this should not be flagged. Oh, no, it's the hedge pressure break. This is an interesting sign for a squeeze to the upside. I do like that idea. Everybody make sure you do me a favor. If you haven't signed up for the Rocket Scooter extended trial yet, and you like what you see, go here. It's going to be $35 a month to check it out for 3 months. You get a special deal in the middle of your trial and at the end of your trial. You do want to stay with put. We're having only a certain amount of people that we're going to give this deal to. So if you guys are interested in checking us out, we're obviously building out the member base, and you can check out our $199 full package, $199 a month with all your data feeds. Comes with your equities data, your options data, all the stuff comes built into that. It's only $35 for 3 months. Massive. 83% off, right? Just to get people in, you can go through the entire training program, full unlock. It's not even a trial version of anything. You get the full unlock of Pro. Just check it out. You can learn with us. Join our growing member base. We're about to hit our 4,000th user account. Claps around the table. You guys are awesome. Thanks for supporting the drive. Like I said, Rocket Scooter is thriving in this recession, and we're hiring people. So we will be sending out announcements. But like I said, we're hiring an affiliate program director. So toss me a resume if that sounds interesting to you. haven't done much in Zoom lectures lately. Where you Zoom that seems to have another 1,000 new members. Yeah, well, pretty much. The reason I haven't been doing Zoom was because we had, well, number one, I went on vacation. So I took a week off, and then on vacation I came home early because we released a feature on the website that created a bug that almost just that essentially would have kicked everyone out of Rocket Scooter. That's kind of a mildly annoying bug. Yeah, that's no big deal. Like if we would have waited for a month, it would have literally kicked everyone out of their membership. And those of you that got affected, we got everyone situated, but man, it was a frenzy because it was hard for us to figure out what had happened. But essentially on the renewal date, something weird happened in Stripe. There was an update in Stripe and disagreed with something we had, and we just, anyways, dominoes fell, and that was a week worth of literally frenzy and all of us yelling at each other to figure it out. It probably seemed pretty mild on the surface, but on the back end we were like, meeting, okay guys, meeting like nonstop around the clock about it. So there's no Zoom calls there that week. There's a difference between my link and Ashton's link. There is no difference between my link and Ashton's link. It's just who gets credit for the sign up. It's like you're walking into the Gap and we're both selling clothes. It's who gets credit for selling you those jeans. Is there a Discord channel for monthly maps? There is, I believe, yes, monthly maps channel. So we got everyone back in. That was a whole week worth of struggle, which is kind of funny. We ended up kicking out about 20% of you guys over the course of a week. And it was frenzy. And then we got everyone back in. Phew, it's fine. And since then, we've gained 100 more active subscribing members. So it's been kind of a big growth spurt, still getting big. It's still crazy. But then just after that, we kind of got that settled. And last week was okay. And then I had to go to the doctor and a bunch of stuff. I had to take Nicole to the airport, pick her up. So now I'm sick. So what I'm going to do is I'm really going to start this program. And now we're cool. Now everything's stabilized and settled. And we're going to start doing Zoom calls every day again. They're going to be at weird random times. I was having them, but they were at random times. So normally they'll be at about noon or so every day. Is a new feature only for new peeps? No, you get you're a lifetimer, dude. You get everything. Lifetime, you get everything forever for one price, including all your data. Charles, thanks. Check it out. You won't be disappointed. We want to make sure that people leave our class. The cool thing about our classes is you won't learn a single thing that you can learn anywhere else. The entire curriculum is unique. It's not a course on charting. It's not a course on time frames. It's not a course on candlesticks. It's not a course on chart patterns. It's not a course on technical indicators. Zero of that. Zero of that. We have 7 modules worth of courses. Risk management, position sizing skills, position manipulation tactics, lowering your cost basis, entry and exit points, risk management. It's like trader skills. It's not chart reading. Google that stuff for free. YouTube can train you on anything for free. We're training you on trading wisdom, risk and reward, how to gauge the market, like I was talking about earlier, how to gauge and predict fundamentals by piecing it together. It's clever trader skills taught by a real trader. Ashton, his stuff is dynamic. It's awesome. I love it. Dynamite. Love it. Teaching on patience, investment principles, swing trading mechanics, options, things like that. A lot of good stuff there. It's not letting you join on that link. Hold on. Did I Rocket Scooter? Did I spell it right? Yeah. Okay. You click it. It should let you sign up. Is there a story behind the name Rocket Scooter? Absolutely. There's a story behind the name of Rocket Scooter. Would you guys like to hear it? Andrew, if you already have an account, it won't let you join. If you already have a membership, it won't let you join either. It blacklists so that you can't like continuously do the trial. So if you've already done it before, it won't let you do it. If you already have an active membership, it won't let you do it. If your phone number is already tied to the extended trial one time, it won't let you do it. So a couple of things to answer questions you can answer yourself. If the answer is none of those things apply to me, then we'll work through it. Send me a message in Discord. Tell me your email to look up. I'll look up your account and we'll walk you through the steps. So Rocket Scooter, right? Okay, first of all, you guys know I'm a chemical engineer. I am a science nerd and a math junkie. I was a competitive mathlete in high school, a competitive programmer in high school. I did everything competitive. I was like, when I feel like Saved by the Bell, I was like the Jesse Spano of my high school, except I wasn't valedictorian. I didn't really put too much effort into doing very well in my grades. I just excelled in competing, which is the funny part. Like I would, in college, I was cum laude in engineering school. So I graduated with honors. I was one of the top of my class. So I really got my shit together and studied and got good grades in college because I knew it was worth it. In high school, I just kind of flaked around. I got a perfect math SAT score in high school. I also got a perfect math SAT score when I was 12, and I took the SATs when I was 12 as well. So I was always like gifted math guy. I was, okay at everything else. And so I loved competing. I would do everything competing. And again, that's why trading was such a good fit for me. I love competing. I would only do stuff to compete. I never played single player video games. I always played against another person. I wanted always to be stimulated by a thrill of competition. So in school, I used to compete in everything. I was in theater, debate, academic decathlon, science, computer science, math. I was captains of all those teams. I was literally in every single club known to man, and I was competing. I lettered over 40 times in high school from competitions. I was state math competitor from like junior high to high school. So I was like that guy, competition. So rocket scooter comes from this theory, the story starts there. Like a rocket on a scooter is to take something that's basic, that you don't think too much about, and you amp it up, right? You take something, a scooter is a kid's toy, right? And you take something that's basic, that's average, you pedal with your feet. It's from the Stone Age. The Flintstones pedaled their car with their feet. You put a rocket on it. You engineer something to perfection to be better than everybody else. It's competitive spirit. And so the reason that the name came out and why it's rocket and scooter is obviously rocket is a nod to my engineering and science background. Rocket clearly means that you've engineered something to perfection. Rockets lift large chunks of aluminum off the air and they can fly through the air like birds, right? That's a rocket. So the name came from a really just funny story, but we were trying to make something that was a nod to our engineering background. If you actually look at the logo and zoom in, the rocket engine is not hoisted on there like welded to the chassis of the scooter. The rocket's actually tied on there with a piece of rope, if you look at it. So it's kind of like a nod to the idea that I built it in my garage, if you guys like that. So you actually zoom in on the logo. It's like you take a rocket engine and we just kind of wrapped a piece of rope around it and tied it into a knot. It's like, and it really kind of is a testament to, a couple engineers tinkering in their garage. It's like prototype. And it's to show the ingenuity and the continuing push to innovate, but like not like in a corporate mentality. It's like we built this ourselves. It's kind of like, patched together. And so the neat idea was I told the designer, I said, I want a scooter, mix these concepts together. I want a scooter and a stock chart. I want a rocket engine. I want it to look like, two teenagers built in their garage. Ready, go. And that's where it came from. The story was essentially back in 2020 when we came up with our first app, which is the Light app. The Light app was, and again, this came from an impassioned speech that I gave after our, it was a data thing. So our options data provider, here's one of the neat things about it. We have one of the premier options data providers that we get Opera data from. This is powering our hedge pressure in our zones calculation. And so what we created actually bottlenecks an entire data providing company. So the thing is that imagine data providers, they get this Opera data feed, which is this massive data feed that you can't analyze in real time. It's so big. There's no computer on earth that can parse 100% of that data in real time. There's entire companies that have spawned as roll-up companies that interpolate and parse in like frequent intervals of portions of the data and estimate what happens in the middle, because you just can't analyze that much data in real time economically and feasibly. So there's companies that have different technologies on how fast they can get the data to you, because there's just so much options data. Every option has a bid and ask and a last traded price, and it's just mountains of data. I mean, it's universes of data. And so no company in the world does what we do. And so our data provider wasn't designed to handle it. They gave us specifications of the different packages we can buy for like different dedications and delivery methods. And so being an engineer, you give me the specs, we design inside of specs. And we design inside of specs. And when it came out that they couldn't handle the throughput because their specs weren't necessarily, it was not because they did anything wrong and we did anything wrong. There was a missing number that would have changed our entire design that was essentially had to do with the roll-up procedure. So they couldn't handle what we needed. So to calculate resilience, for instance, right? Imagine this, monthly hedge pressure resilience is 500 companies in this little yellow line. We need 500 companies worth of monthly hedge pressures calculated the moment the market opens. We have to look at 500 companies and every option that exists for those 500 companies. Every bid, every ask, every options traded price, every Greek, everything analyzed within a second to calculate 500 hedge pressures on a server, to send it through outer space, to come to you, to come to our servers, to turn into an indicator to be displayed on a chart. So the fact that within, you know, you basically take the entire, they're designed to like parse out to a platform of like whatever the user base. The user base is not going to need stock number 499 in the S&P, which no one will look at ever, immediately calculated. They had this caching issue. We called it cold caching. What happened was it's in the back of the warehouse. It's a data point that nobody ever needed before. So they didn't pre-cache it to make it easily accessible. We were like, we need all this data from you for like 1 second and turn the water hose off. And so that created like a bottleneck for them and all their other companies that use the same, like basically we bottlenecked their data. And I was so pissed because I was like, the specs didn't say this. And they're like, well, Matt, why didn't you just pay double the price for the dedicated socket connection that would have all this kind of stuff? Because they gave me specs, damn it. And I programmed in the specs. I said, if you have an option for me to sit there, and I told a story to my team. They're like, well, Matt, technically you're correct. And I was like, I'm an engineer. If you give me two options, an expensive option, a cheaper option, and I can cleverly design into the cheaper option, I will do that. It's an engineering perspective, right? And I said, we went over the specs over and over and over and over again to make sure we can design into it and it would work. And we designed into it and it didn't work. So imagine an engineer would be so pissed. You designed into specs, right? And it doesn't work. And you're like, did they lie to us? Did they did nothing? Nobody was wrong in this environment. It was something. I'll take the blame for it. It's something we didn't tell them we needed to do because we didn't explain fully what we need 500 stocks in the S&P. It was more like if we would have had more detailed discussions up front, they would have recommended a better package for us. So like, they're like, well, you know, when we run out and go fetch data at company 480, then that comes back, then we got to fetch 481, that comes back 482, and it just progressively delayed the data. So essentially, it would be like 15, 20 minutes delay before we got all those hedge pressures calculated. And we're like, no, we need them all calculated within the first minute of the market. And so it would come in at minute 20. And then, so I gave this impassioned speech to my team. I was like, you know, they were like, just go buy the more expensive package. And I said, no, that's the principle of the matter. You gave me specs. I designed into it. It's going to take a quarter of a year to redo everything. And we'll eventually redo it if we need to. But I was like, no, these guys gave me specs for a scooter. And I figured out like, all right, they gave me specs. And I go, the speech was more like just this long-winded speech. I go, you know, these guys offer me to either buy a Cadillac, a car, or a scooter. And I looked at the prices and I said, oh, I can take that scooter, build a rocket engine on it, and put it on there that makes it even better than the Cadillac for a fraction of the price. Engineered to perfection. I put that rocket on that scooter and that thing didn't even fly. And that's the answer. That's exactly what it. Put the rocket on the scooter and didn't even fly. And I'm pissed. And so we're coming up with names for the company. It was like, we sat there chewing over names. We had hundreds of names. We were always sending name ideas to each other. And I'm glad we didn't pick any others. All the other ones were so dumb in hindsight. They were like, they just sounded like hokey Wall Street data names, like Hedgefax and like things like that. I was like, I'm just glad we didn't pick that. And I was like, guys, I got a great idea for a name. They go, and I go, Rocket Scooter. And they go, what, you mean like that, like the data thing? And I was like, yeah. And they were like, well, that sounds extremely goofy. Wait, I was like, well, oh, okay. And we chewed on it for a little bit. And then I came back and I said, no, it's just like what we did here. Because a scooter is a kid's toy, which is like basic charts and basic TA and candles. And we took the basic stuff and we amped it up and sent space is what we tried to do. And that's what we're doing to Wall Street. And then that's the name of our company. And everyone was like, oh my God, that's amazing. Let's go with it. And it was like pretty much where it came from. So it's what we stand for here. And we can take anything that we can find something that's the basic thing everyone has and overlooks because it's so simple, and we try to engineer it better. And it turned out to be like, oh, that's amazing. That's actually that's so fitting. And then it just was catchy. And also I had one other rule is that you'd have to be able to spell out the company name in emojis. That was another goofy rule I had too. So clearly you couldn't spell out the word hedge with emojis. So rocket scooter can be spelled with 2 emojis. There you go. You like the name much more after the explanation? Well, it's kind of funny because the logo has a lot of things into it. There's a lot of like symbolism in the logo that also is like hidden. That's pretty cool too. And I even have like this whole Discord channel where we're all talking about like the number of stars in the logo. Each star represents one person on our team, and that whole story of the data provider is also told in the logo, hidden by the positioning of the stars and stuff. It's a neat. We actually had a lot of fun. I was like, this is the only time in my life I ever get to have this much fun with something. So there may or may not be a DTP palm tree hidden in that logo somewhere. I mean, there's a lot of neat little story elements for that logo. The name is fitting. So we thought, what a cool name. It's catchy, but in reality, it does have a story, because that is exactly how I was like yelling, screaming, the principle of the matter. They were like, Matt, just, pay double the price for the data and eliminate the problem. I was like, no, we design within specs and we're going to make it work. And we made it work. So at the end of the day, my engineering solution actually worked, which is good. But ultimately, we will have to go to the bigger package just to handle bigger throughput. Like ideally, we can't make a Russell resilience at this point because of that same effect. The data company had to actually modify, and they worked day and night for a long time and modify their infrastructure just for us. And they provide data for major companies, major tech companies like us. They provide data for tons of them and never had any issues. The reason that we needed every stock option for every company in the S&P to calculate resilience within a second of market opening, or a second of each option's market opening, is the reason there was a hiccup. Because in reality, we asked for something nobody did. Nobody would be looking for that data. And if that one person needed that data, you'd fetch that stream and open that socket and then get that data streamed to you. And there'd be like a second delay or something, right? You wouldn't notice it because it's such an abnormal request. But we had to request all those instantly. So those socket connections, that one would stack and then another would stack and another would stack, and the delay cascaded. It was a delay on top of a delay on top of a delay. So each request of we call it a cold cache. It wasn't fully like an example of caching, right? If I open up all these tickers, all these hedge version stuff are like cached locally on your stream. See how I click the button, it just loads right up. It's all stored locally. That way it doesn't have to really fetch anything from the server. We send it to you and you have it. That's why you can just immediately bring it up. But imagine if I send Goldman Sachs to talk to the server. What's the hedge pressure? Okay. So anytime you talk to the server, the traffic holds up and you bottleneck, and the delay gets bigger and bigger and bigger. And so we essentially bottlenecked their fetching process and their database. I'm going to explain it in the easiest way to understand. It's like a guy sitting in a warehouse, in an Amazon warehouse, right? And all the shit everyone buys, I don't know, dish soap, Celsius, cat litter, whatever, is there in the front. And then you have that one thing that nobody ever buys, like, I don't know, something weird and obscure, like sidewalk chalk. I don't know. That's something common. It's something weird that nobody would ever buy, right? And you there's a guy, and it's in a side warehouse, and that there's a guy like sitting at a desk with his chair leaning back, with his feet up on the desk, sleeping because he never has to do anything. And you walk in there and kick the chair, and he's like, what? And you're like, hey, go to the back corner of the warehouse and fetch me this thing that nobody wants. He's like, oh, God, okay. Yawns, gets up, slowly walks to the back, grabs a thing, and comes back. When he comes back, there's an order on the desk for 10 more things in 10 different corners. He's like, I gotta get these other things too. Nobody ever orders this. Cat mittens? Nobody buys these things. All right, let me go get them. And he goes, gets the one thing, comes back, and gets another thing, goes back, and the 10 turns to 50. There's 50 more things from this warehouse. Nobody ever orders anything from here. And you guys want everything from here? We're not staffed for this. And that's exactly the way to think about it. They don't have the desire, or, and again, I wouldn't either, to cash, which is to bring something to the front of the warehouse and have somebody ready to grab it immediately when you need it, or storing it up at the front when no one ever asks for it. And we ask for everything from that sleepy guard. Cat mittens. Everybody sees the Always Sunny reference, right? So that's really what it was. And so they actually went out and started caching that data just for us, which is a very big up for these guys who really kick ass for doing that for us. And we found an engineering solution like, oh, we only need this data for like the first minute. Okay, well, that's really not a big deal. If they were to do it all the time, right, to continuously pay for like the server and the throughput of that amount of data in real time, obviously that'd be a massive request that nobody would want to facilitate. But we can do this for you guys for the first couple of minutes. That's no problem. And then they redesigned their entire infrastructure just for Rocket Scooter, and that was very awesome. And that's another reason to keep the name, because it was a clever nod as a thank you to this major data company, one of the biggest ones in the world, that actually changed their infrastructure for us, because they were really cool about it. So then we gave them an honor in the logo by putting some stars there that represented the people that also made this possible from there. So a couple of employees there have stars in our logo as well, dedicated to them. Grow your own catnip. Oh yeah. So that's the story of the name. And it was like the more we said it to each other, it was so fitting, because it hit all of our principles in so many different ways. I also wanted it to be like NASA-like. I was like, I want there to be like space somewhere in the background. I'm a big space nut. I'm a huge cosmology fan. I love studying about the universe. I mean, the entire YouTube algorithm, it feeds me like nothing but science TED Talks. I mean, or like, how do black holes work? What's Hawking radiation like? Is time travel really possible? And it's all mathematics of this stuff. I watch PBS Space Time religiously. I think what I watched last night was how does the Higgs boson give things mass? I mean, like that's literally what I do for fun. I think I get high and watch science YouTubes. Oh, thanks, man. Udry, beautiful story. Oh, thank you. Wait, Jerry Springer died? No way. You love the name Rocket Scooter. It fits. Imagine being called like Hedgify or something. Yeah, like Barb, literally. Like if I go through the list of the names, they're all barf. Like, yeah, Hedgify, Hedge effects. Like it was like the brainstorming sessions were all like that. Let me see if I can find like the company names. I'll read you guys some of the throwaways. Right. Let's see if I have it. Here. Here we go. Oh my gosh. Barf. Yeah. Hedge Pro. Pressure Invest. Hedge Sonic. Like we just sat there. Like I remember me and the partners would like call each other and just be like, all right, let's get on a conference call. We sit there and like we all be drinking or something and like let's throw some names out. Simple Hedge, Hedge Clever, Investonomics, Newtonian Trading. We came up with some barfy sounding shit. I'm not gonna lie. Your dad's an astrophysicist. Does this help you if I apply for does this help me if I apply for a job? Oh yeah. God particle, nice. Oh yeah, how the Higgs boson gives things mass. Mass is one of the interesting things. What like they're starting to find out is that mass and light and time and gravity are all tied together. Gravity waves, they actually recently revealed that gravity waves, which is something we detected recently because of two black holes merging, allowed the light being bent in waves far enough away from the black hole that shouldn't have been interactive in a way, and we detected that sent waves through space-time as two black holes emerge. So gravity waves, they found out, can actually create light, and that is a huge thing because it ties everything together. How the constant speed of the constant speed of light in space is tied to the propensity for energy and mass to have matter or mass, like matter to have mass, is now tied to light. And mass has an effect because when mass communicates information, like when you and I are listening to each other, you're listening to the radio, information is communicated to you through radio waves, which is part of the electromagnetic spectrum, right? Well, two pieces of mass in the universe are connected to each other in multiple ways. The first one is through gravity. Two things have mass. They communicate through each other the same way radio signals communicate from a device to the next. But instead of propagating through the electromagnetic field, it propagates through the gravity field. So it's like radio waves, but for gravity. And so two pieces of mass always talk to each other. All mass talks to each other in that particular way. Gravity waves propagate just like radio waves would. And but the thing is that like that propagation of gravity is all relative to time, and the speed of light is fixed to the ability for time to exist, and time wouldn't exist if matter couldn't exist. And that's all these things we're discovering now, which is crazy. Now, what if gravity was the desire of mass to undo itself? Like, what if the constant propagation through time is for mass to undo itself, for everything to try to go back to where it started? Scary thought, right? Like, why you're constantly falling is that matter is always trying to implode on itself. Why does matter attract? Well, everything's trying to congeal so they can go back to where it started. The fact that you're falling through space-time towards mass at all times means that mass is just trying to implode on itself. That's scary. Anyways, so you're asking me for the scientific like names for you were sure? Yeah, I know, right? I was asking people to like come up with some ideas for us. But long story short, fun. I like watching that stuff. I like to learn a lot. In another life, I would have been an astrophysicist for sure. Maybe a professor. That would have been so much fun. You have a relative who works at NASA? No way. You have not met him, but you share the same last name? Cool. You remember those? Yeah, I remember we all talk about the naming. We all would just be like, somebody help come up with names and this and that. Oh, let's read some of the more barfy ones. Okay. Hedge linear. Hedge expression. Hedge expression sounds like, it sounds like a teenage clothing store, like a Hot Topic. Like you see Hot Topic and then Hedge Expression right next to each other. Continuum trading. I was like, that's kind of cool. Continuum. That's a very spacey. Razor's Hedge, like Razor's Edge, but with hedge. Oh, that's hilarious. Oh my goodness. Then here's more barfy ones like search metrics. Scan simple, trade search. We were kind of like, let's play with the word trade and scan. Oh my god. Ugh. And then right at the bottom of this list, rocket scooter. And then I stopped adding things to the list. And then I wrote something really stupid underneath that. Ready to start the trading day? Let's get scooting. Oh my god, that's cringe. That you had one too many beers that night. All right, I'm out of here. $2,800. Let's get scooting, guys. I'm out. All right. Trade for the day, $2,800 in the big account. 240. Again, not very. I mean, we run up in the upper DD band. Didn't really care too much about this. This trade, upper DD band. Remember, trade from place to place, call it a day, one trade a day philosophy. You know the rules. Little knots and bar still there. At the end of the day, trademark that slogan. Let's get scooting. All right, we're gonna scoot on out of here. All right, I'm out. But seriously though, it's a great trade. BLU DD bands, pretty textbook. Resilience is straight, positive, and the DD was positive as well. Let's see, resilience was right out the door, no hiccup. This is pretty much textbook. Good deal. Nothing from here. Earnings come out. Make sure you be very careful leading into close. That VIX is decaying. Looks pretty okay. The EVXY hedge break. Be careful there because you remember hedge pressure does react to things. So when UVXY connected with hedge pressure, and there's that high volume approach when it gets there, obviously my trade ended when VIX is going to start rearing its ugly head, and there's some end of the day volatility. I still think the market trades up. I still think earnings are going to come in pretty tight, but again, like a day trade, I don't need to bet on breakouts every day. I make my career trades off of this. So pretty much just 60K mark on the 10K to 100K challenge, which is great. I am trading at 72% win rate for the year. I will post the results of the year statement in the Discord as always, so make sure you join that Discord. One of the few folks out there that proudly displays my historic statement, so you guys can actually see my real results and how well I do. Again, my results indicate your results. As you know, to be fair there. I am going to call it a day. Can't argue with a win. That's pretty simple. You know, and of course the trader funding part of things, you have to be very careful in static account. You need that first trade to lift off pretty good. Only bet hard when I got a really good signal. And it was textbook, but still, there was enough travel for me to want to get a big home run off of that. It was only about a 15-point move, and I still got a win on that. It's okay. Hell yeah, I'm super happy. Thank you guys for tuning in. Head over to the Discord. Pretty classic setup. Yeah, that's pretty good. Remember, jump into that extended trial. We'd love for you guys to check out the program. Y'all are all super cool. Follow us on social media, and don't forget to like the stream on the way out. Subscribe to the channel. We're live every day. There'll be a Zoom call later today. Pretty light day. Appreciate all of you. Y'all are all amazing. I'm about to go find my car. Wherever it is. Alrighty, we'll talk to you.